And welcome to the lounge and the indices section here, and we're looking at the 10-year US notes, and we're expecting them to pull back in a wave 4 just below the 125, and that's correct, and it's given the global indices a chance to move to the upside, and we'll look at that in a moment. But with this particular market here, we're looking at wave 4 pulling back to the wave 4 of one lesser degree around here, and then a move up. So once this completes here, then of course the indices will be doing the mirror opposite, and wave 5 up here. But we're hoping that this particular wave structure up here, this wave 5 here, will be the top of the whole correction to the upside. And I can just bring the daily chart across here that we've been talking about before with this, is that this strong move down here looking for basically an ABC correction back up through here. Well, this is actually the bond, so sorry about that, but the same pattern. I'll just bring this one over here for this one. So yeah, look, one more attempt to push up through here before we see this roll over lower through here. So that should be interesting to see if that folds out, because then that will give the indices even more strength. But the S&P 500 here is getting close to the major trading level 2 here, which is the 2000. So it'll be a psychological sort of finish line as well for these markets. So yesterday we were a little bit unsure about how this correction here would play out, and we were looking for a short trade triggering 1955 here, and long trades triggering 1963 or 1964. The wave count here is not really clear here, but it's much clearer on the cash market. But in labeling it the same as the cash would be 1 and 2, and the third wave moving up into the 1980 area. Wave 4 will come back into around the 1970 area, and then we're looking for support on 1972, 1975 and 1980 for further upside here. Looking at this particular wave structure here, it appears that it may not reach this 2000 here, but let's just see how it goes. We could get an extension in here, but first of all we need to, after this move overnight, we need to see that regain itself somewhat here. So we can call this wave 3 in here, or one more little move up here for wave 3 here, and then the A, the B and the C here for wave 4 that shouldn't really pull back down below the 1970 area here, or 68 at the, or say 67. So that's why I always put stops at number 6, 66 in this case. So, but we'll leave ours at 63 here out of the way. It's the same for most of the other markets, but just before we get there, we've got the 4th of July coming up for the US, so I think that's Thursday or probably Friday actually for a holiday. So they'll expect lighter volume on the Thursday as such. And the other point too is that the ADP figures and the private employment figures for the US will be tonight. So they're normally a good lead into what's going to happen with the NFP figures and non-farm payroll figures on the Friday. So if they're positive tonight, then we can expect Friday to be positive as well. But a lot of that movement being positive for the NFP figures will already be priced in, but will be positive all the same. So that's something to keep a bit of an eye on. And of course the Fed's speaking tonight at 1 a.m. as well, so that will be a bit of a driver. The Dow Jones is basically doing the same thing as the S&P 500, slightly different count, but still pushing higher, and expect a classic trading levels pattern across the 17,000. So the arrival, the reaction, the first high above the level, then an A and a B and a C, and then further upside from that point there, but perhaps up to the 17.1 at that point, but in line with the S&P 500. And as I mentioned yesterday as well, it was the Nasdaq that was leading higher, followed by the Dow transports, and that was sort of giving us the edge to the upside. So the DAX and the FTSE are following along. So our wave counts that I've had here as an A and a B and a C is correct. It was just that all this was a little bit messy in here, and and I couldn't sort of see the impulse structure within there. It was just too messy. But look, everything going according to plan now, we should see a move above this previous high here. But we have to remind ourselves that when dealing with big strong whole numbers like this here, they attract larger orders and can certainly skew the pattern before getting there, but it should edge higher. We're already long above the 98.50 and the 98.72. We're going to look to add on the 9900 and scale in through group 1 once we've got tested support there. So don't get too trigger happy. Just allow it to spend a bit of time swinging across there. You're looking for 3 swings across that particular level at minimum. The FTSE's the same as well. We had a different correction here, and it's more laborious, and it was a bit of I could see that we had a correction. It's very much like the Australian market, where this first leg here is in 3 waves. So that really kept me having whatever happens here is corrective, and the 67 was our target in Fibbo extensions to the downside there. So it finally sort of came in there. So yeah, even our market's pretty ugly at the moment. It should sort of follow suit with this particular market here. But what we also need to do here is we need to get past this structure here as well, being 3 waves. So we really want to see, it's actually an A and a B and a C here, and a bit of an expanded flat, and then the 1, the 2, 3, 4, 5, that'll be the top of the 3rd wave, the A, the B and the C for the 4th, then up for the 5th, then an A and a B and a C back through to here, and then up through to here. So that's what we're looking for there. On the intraday here, it looks a bit like this here. So I've removed the A from this side and put the 1 on this side, even though we've still got a corrective pattern through here. But this would be up for 1 here, the A, the B and the C here. That counts quite nicely on the cash market. It looks pretty ugly here, but on the cash it's nice and clean. So we're looking at a 3rd wave up here, but I'm still mindful that it can be a C wave. So that's why before trading here, we would need to see a corrective pattern through here. So a little first high above the level, some type of ABC here, any type of correction will do. There's 12 of them all up. And then once you've got, once it's after some type of correction, then tested support, then go up. And the other flip side to this is that if 68.30 if this just moves straight up here and finds support on 68.30, the top of group 1, then we need to go long from that point there. But we're long at the moment above the 50 and the 72. We can bring the stop up under this area here. Check on the text. The text for this report has always got the entries and the stops on them and targets. Now, the Australian market is, as I've been sort of saying, is much more like the English market, where we've got this 3-wave structure here. So this to me is quite clearly corrective, which makes whatever happens over here, the rest of this all corrective as well. It's just a matter of figuring it out. It's probably easier in hindsight. But I mean, if I'm looking at this here, I mean, it should follow the FTSE up, and the FTSE's got much the same pattern as all of this. But the move up here overnight, from good figures in yesterday from all the manufacturing figures from China and whatnot, and expect it to move up from from these lows here, but it's really struggling to do that. In fact, this particular pattern here is much more bearish than it is bullish. But I need to heed the warning of the FTSE moving up, not so much the US markets. I know that the DAX would influence the FTSE, and the S&P 500 would influence the DAX, but those good manufacturing figures coming out influence all of us. But this is just not lifting off here. So on the intraday here, all I can offer here is that this little move up through here is an impulse wave, 1, 2, 3, 4, 5. So if that's the case, we should see some sort of little correction across here and then a move up from here. That it can give us this, all we can predict is 5 waves gives us a correction and then another 5. This is the 50 and the 61.8 retracement level at these areas through here. So we need to be mindful of that, because if it only gets up here in 3 waves to this area here and then rolls over, then we've got a bear market on our hands as such. Because the thing that bothers me is this move down through here is more like 5 waves. So if it's 5 waves there, then it's likely this can be an A and a B and a C moving back up into the 61.8 retracement level, which is around 54.30, and then it can roll over from here. But I don't want to be a pessimist when I can see that the FTSE is making an effort to go to the upside. So for some strange reason, I haven't got this right here. There's another count for it. It'll probably come clear later on. Can be simple as like this being the A wave down here, this being the B wave here, and this being the C wave over here. But I just don't know. Nothing sort of fits at the moment. I don't want to force it to fit, because using Elliott to advantage is not the way to use it in forcing it. So it's good to use the other methods to support it. And the other point here too is that we are, below the closest largest number here, the 53, 5400 here. So you really want that as support for going long. I think there's much better trades over in the FX market actually. It's been quite a reasonable good few days for the FX markets, but either that or trade the S&P 500 instead of this particular market here. But it can catch up, so we need to be mindful of that as well, just like the Dow Jones caught up to the S&P 500. So look, maybe support on top of that, the 54 here or going long here. You'll need to keep the stop out the way a little bit. You have to bring it down closer to the 53, 83 or 86, but I wouldn't be putting it any closer than that at the moment. And if you do buy on here, then we've just got to keep the stop under the 5400 as well, and then we've got to live in hope a little bit that the market will push higher in terms of, instead of being a C wave here, a third wave, a fourth and a fifth. If we can get this 5 wave structure here, then we know we've got ourselves a bull market, and then we'll see a retracement here, and then we can really sort of, really entertain ourselves on this side of the market over here once we've got our 5 waves here. But we don't have those yet, and they may not be delivered, and this can fail just by having 3 waves up here. So we just need to be mindful what we're doing, that's all. Alrighty, thanks for listening. Cheers.